The dollar versus Swiss is having a very volatile day, and it's had a very volatile week so far this weekend, going back to last Friday as a matter of fact, and last week, and the week before that, and the week before that. I'll go through the technicals that are driving this currency pair in this video, so let's get started. Listen, if I were to put a box around the price action in the dollar versus Swiss, you can see not only intraday there's lots of ups and downs, but overall there's this up and down, 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 up and down. And then you look at a day like today, and the market price started up here and then moved sharply to the downside, and then we moved sharply to the upside, and then we moved sharply to the downside. The pair is sure doing its laps and frustrating traders in the process. In this type of environment, what you have to do is try to be patient and look for levels and clues from the technicals that will help you determine how you can make a few pips in the market. All right, it's nothing more, nothing less, because the market is moving up and down and up and down. There's not a lot of meat on the bone, if you will. So if I were to take a look at this chart, what is consistent at this 38.2% retracement is that we found willing sellers here yesterday. We found willing sellers here again in trading here today. So traders who took the clue from the 38.2% retracement of this move to the upside as a potential risk-defining ceiling level did benefit from it yesterday. They benefited from it again today, and today we had the hindsight of yesterday's stall at that level as well. So if you were prepared for that and gave it a shot, you had the opportunity to then see the price get below the 200-hour moving average, get below the 100-hour moving average. And what I like about getting below the 100-hour moving average is that the corrective move right here came right up to that 100-hour moving average and found willing sellers again. So we're on this. We've put together a couple technical reasons for the downside off of the 38.2, off of the correction to the 100-hour moving average, finding willing sellers against that. So that's good for the bears. And as you can see, we're trading to new session lows at the moment. Now, what we have to also be aware of is that history tends to repeat itself. What we know is that this swing area right through here, we're in a number of different swing lows and swing highs, where the market was trying to figure out what it wanted to do. Finally figured it out and moved to the downside here. We moved back above this level right through here. We started to find this level this area as a point of support until just last Friday during the Powell speech, where the price did fall below that level, but then moved back above it in trading on Monday. And this low right here was near the low of that swing area. Found support buyers. We definitely found support buyers here to push back to the upside. So this area is going to be a key support level. So although we're building on the 38.2, building on the 100-hour moving average, we have this target down here that will look for support between 0.8017 and 0.80233. Conversely, of course, we can bounce back from here and get back above the 50%, get back above the 100 and 200-hour moving average, and the storyline would change. I can't help that. All I have to do is listen to what the market is telling me right now and make a judgment as far as what I might see in the future. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.